Investing in real estate can be a lucrative opportunity for those looking to diversify their portfolio and generate passive income. With so many different types of real estate investments available, it can be overwhelming to decide which one is right for you. Hello viewers, welcome to my YouTube channel. Today in this video, we will provide a comprehensive guide to the different types of real estate investments to help you make an informed decision. However, before we start our countdown, we would appreciate it if you would subscribe to our YouTube channel and also press the bell icon. So, let's get started. Understanding real estate. The terms land, real estate, and real property are often used interchangeably, but there are distinctions. Land refers to the Earth's surface down to the center of the Earth and upward to the airspace above, including the trees, minerals, and water. The physical characteristics of land include its immobility, indestructibility, and uniqueness, where each parcel of land differs geographically. Real estate encompasses the land, plus any permanent man-made additions, such as houses and other buildings. Any additions or changes to the land that affects the property's value are called an improvement. Once land is improved, the total capital and labor used to build the improvement represent a sizable fixed investment. Though a building can be raised, improvements like drainage, electricity, water, and sewer systems tend to be permanent. Real property includes the land and additions to the land plus the rights inherent to its ownership and usage. Types of real estate. Apartment rentals, REITs, commercial real estate, land and crowdfunding platforms are all types of real estate investments. There are several types of real estate investments, but most fall into two categories: physical real estate investments like land, residential and commercial properties, and other modes of investing that don't require owning physical property, such as REITs and crowdfunding platforms. Investing in traditional, physical real estate can offer a high return, but it also requires more money upfront and it can have high ongoing costs. REITs and crowdfunding platforms have a lower financial barrier to entry, meaning you can invest in multiple types of real estate for far less than it would cost to invest in even one traditional property. These alternative real estate investments also offer the distinct advantage of not having to leave your house or put on pants to start investing. Here is the list of types of real estate. Rental properties. Rental properties are one of the most popular types of real estate investments. In this type of investment, you purchase a property and rent it out to tenants. This can provide a steady source of income, but it also comes with the responsibility of managing tenants and the property itself. Commercial properties. Commercial properties refer to properties that are used for business purposes, such as office buildings, retail spaces, and warehouses. This type of investment can provide high returns, but it also comes with high risks as businesses may come and go. House flipping. House flipping refers to buying a property, renovating it, and then selling it for a profit. This type of investment can be lucrative, but it also requires a lot of time, effort, and expertise. Residential real estate. Residential real estate is a popular investment choice for those looking to generate passive income through renting out property. Residential properties include single-family homes, multi-unit apartment buildings, townhouses, and condominiums. The demand for rental properties is high, and investing in residential real estate can provide a stable source of income. However, investing in residential real estate also comes with its challenges, including tenant turnover, maintenance costs, and potential vacancy. Commercial real estate. Commercial real estate refers to properties that are used for business purposes, such as office buildings, retail spaces, and warehouses. Investing in commercial real estate can be a profitable venture as it can generate higher rental income than residential properties. Additionally, commercial leases tend to be longer than residential leases, providing more stability for investors. However, investing in commercial real estate requires more capital upfront, and there is a higher risk of vacancies due to economic downturns. Industrial real estate. Industrial real estate refers to properties used for industrial purposes, such as factories, distribution centers, and storage facilities. Investing in industrial real estate can provide high returns as industrial properties tend to have long-term leases with stable rental income. However, investing in industrial real estate requires significant capital upfront, and vacancies can be costly due to the specialized nature of these properties. Retail real estate. Retail real estate refers to properties that are used for retail purposes, such as shopping centers, malls, and storefronts. Investing in retail real estate can be a profitable venture as it can generate high rental income and long-term leases. However, investing in retail real estate comes with its challenges, including changing consumer habits and competition from e-commerce. Real estate investment trusts. A real estate investment trust is a company that owns and manages income-producing real estate properties. REITs provide a passive investment opportunity for those looking to invest in real estate without the hassle of managing properties themselves. Additionally, REITs are required by law to distribute at least 90% of their taxable income to shareholders, providing a stable source of dividend income. Real estate crowdfunding. Real estate crowdfunding is a relatively new investment option that allows investors to pool their money together to invest in real estate projects. Real estate crowdfunding platforms connect investors with real estate developers and provide opportunities to invest in a wide range of properties, including residential, commercial, and industrial real estate. However, investing in real estate crowdfunding comes with its risks, including the potential for project delays, cost overruns, and market fluctuations. Raw land. If you build it, will they come? Investors typically buy land for either commercial or residential development. But buying land to develop involves a fair amount of market research, especially if you plan to develop the property yourself. This type of investment is best suited to someone with a large amount of capital to invest and a deep knowledge of all things real estate building code, zoning regulations, floodplains, in addition to an understanding of the local residential and commercial rental markets. How to invest in real estate. Some of the most common ways to invest in real estate include homeownership, investment or rental properties, and house flipping. One type of real estate investor is a real estate wholesaler who contracts a home with a seller, then finds an interested party to buy it. Real estate wholesalers generally find and contract distressed properties but don't do any renovations or additions. The earnings from investment in real estate are garnered from revenue from rent or leases and appreciation of the real estate's value. According to ATTOM, which oversees the nation's premier property database, the year-end 2021 U.S. home sales report shows that home sellers nationwide realized a profit of $94,092, a 45.3% return on investment, up 45% from $64,931 in 2020, and up 71% from $55,000 2 years ago. Real estate is dramatically affected by its location, and factors such as employment rates, the local economy, crime rates, transportation facilities, school quality, municipal services, and property taxes can affect the value of the real estate. Investing in real estate indirectly is done through a real estate investment trust, a company that holds a portfolio of income-producing real estate. There are several types of REITs, including equity, mortgage, and hybrid REITs, and are classified based on how their shares are bought and sold, such as publicly traded REITs, public non-traded REITs, and private REITs. The most popular way to invest in a REIT is to buy shares that are publicly traded on an exchange. The shares trade like any other security traded on an exchange such as stocks, and makes REITs very liquid and transparent. Income from REITs is earned through dividend payments and appreciation of the shares. In addition to individual REITs, investors can trade in real estate mutual funds and real estate exchange-traded funds. Another option for investing in real estate is via mortgage-backed securities, such as through the Vanguard Mortgage-Backed Securities ETF, made up of federal agency-backed MBS that have minimum pools of $1 billion and minimum maturity of 1 year. Or the iShares MBS ETF, which focuses on fixed-rate mortgage securities and tracks the Bloomberg US MBS Index. Its holdings include bonds issued or guaranteed by government-sponsored enterprises such as Fannie Mae and Freddie Mac. Which real estate investment is best for you? If you're considering investing in traditional real estate, like residential or commercial properties, doing your due diligence doesn't just mean coming up with a down payment. Knowing your local market is important. If there isn't much demand for homes or commercial space in your area, or property values start dipping, that investment could quickly turn into a burden. If you prefer to be more hands-off with your investments, REITs and crowdfunding platforms are easier ways to add real estate to your portfolio without owning physical property. Some brokerages offer publicly traded REITs and rate mutual funds. So this was our today's video. I hope you all like this video. Don't forget to hit the like button and subscribe my channel. And also share it with your friends and family. We will be back soon with a new video. Till then, keep supporting and take care.